It's about that time of day again, folks. Welcome back. Welcome back. My name is Joseph James. I'm a day trader here at SchoolOfTrade.com. Every morning at 8 a.m. Eastern Time, we're in a live trade room. Come out and see me every morning at 8 o'clock Eastern Time in our live trade room. We trade crude oil futures, gold, euro, Russell, call trades in real time. And, of course, I got my buddy, my partner in crime, my colleague, and a fellow graduate of the School of Trade. His name is Marty Errico, and he's going to provide us today with some very unique and powerful pit analysis today. We call this the crude oil morning prep. We're going from the screen here in Los Angeles all the way to the trading floor in New York City on the NYMEX exchange. A very powerful and unique way to begin your day, kind of like your cup of coffee in the morning, right? We like to start our day off with a bang. Now, here's the plan for today. I'm going to kickstart the day here with some technical analysis. That means I'm looking at charts. I'm not much of a fundamentals guy, but I will take a look at some news every once in a while. I'm a chartist. I believe that the technicals lead the fundamentals. That's right. I said it, right? Technicals lead the fundamentals. And today, I'll be working on a top-down approach, meaning that starting with a slower time frame first, moving my way down to a faster time frame as I go, because I know that if I analyze the last few months, the last few weeks, the last few days, well, if I can apply that to the last few hours, specifically what's happening coming out of overnight and trading in London. I'm talking about the U.S. morning trading session this morning from 8 a.m. until noon. Therefore, I'm looking at the previous trading session, which is London's. Okay, we'll talk about that. I'm going to work on anticipating direction at the open. I know that we're going to get some high percentage trading opportunities starting at 8 a.m. Eastern Time if I can just figure out where's my major support and resistance, what's my direction going to be for the first few hours of the day. We don't know what's going to happen the rest of the day, but I know I can predict that high percentage move first thing this morning. Moving forward, once I'm done with you, once we've looked at all the charts for today, I'm then going to toss it all the way across the country from Los Angeles to New York City. We're going to talk to Mr. Marty Errico, a fellow graduate of the School of Trade. Marty has his broadcast every morning at 8:50 a.m. Him and his partner Jeffrey do a great job live from the exchange on the NYMEX. It's a fantastic way to really bridge the gap between screens and floors, right? Us screen traders, we really don't have everything that Marty has at his fingertips on that trading floor. Now, the pit analysis this morning, very powerful. Market direction, intermarket divergence, crude oil, RBOB gasoline, heating oil, and Brent crude. Always very important to watch those correlated markets. Market internals, important option prices, and those always important, but oftentimes a little bit confusing, those pit session trading levels. Remember, guys, there is a difference between the electronic trading hours that I trade and the regular trading hours that Mr. Marty trades. So we'll be talking more about that here in just a moment. Right, so make sure you're listening in here for that last bit of information today regarding the price levels, right? The overnight price level, or the pit session trading levels. All righty. Now that you know the schedule for today, there's no reason to delay here. Let's get started. Now, every morning we publish all of our notes on our blog. I keep notes throughout the entire day, and I put them up on my blog every single day. Now, you can get to this crude oil page by going over to sidewaysmarkets.com. And then up top here, again, over at sidewaysmarkets.com, you'll see the link here called Crude Oil Squawk and Prep. Crude Oil Squawk and Prep. That will take you right over now to our charts and all of our commentary for today. I'm going to begin here first with the news worksheet today, and then we're going to go on down the charts that we have posted here, and we'll talk about the plan today. First things first, we always begin every day with a formal morning prep. In my humble opinion, if you don't have a plan for the day, right, how can you then trade that plan? If I don't know what my goals are for today, how will I ever be able to hit those goals or achieve those goals? What's the plan for today? Well, what day of the week? What week of the month? What month of the year? Today's a Friday, right? All right. What week of the month? Third week of the month. In fact, it's the third Friday of the month. And what month is this? This is the month of August. And we know that month of August is a summertime month. Right? It's the granddaddy of all the summertime months. Now, I know if you've been listening to me this week so far, you've probably heard this just a few times out of my mouth, right? I know you have, Marvin, and you too, William, right? Members of mine have heard me talk about this over and over again. We know this is important information. right? I continue to get traders emailing me saying, what's going on with price action? Why is it different right now? And I said, well, it's not more dangerous. It's less consistent because it's the month of August. The month of August is notorious for being a trader's holiday. In places in Europe, Italy, Spain, there's no air conditioning in these office buildings. They take the whole month off. Would you want to work in 100-degree heat in an office building? Absolutely not. So they take the whole month off. It's not a blanket policy across Europe, but most Europeans are finding ways to take a break in the month of August. Okay? Same thing here in the United States. Same thing around the world. With the exception of being below the equator, pretty much everybody's going to be looking to take some traveling time in the month of August. So we know the price action is going to be inconsistent. What I mean by that is, in the month of August, we must expect the price action to be sometimes great, sometimes very slow. You'll have moments of very good personality and moments of very poor personality. It's up to us to identify when the times are good so we can trade away, or when the times are bad and we can sit on those hands. I don't care if you need duct tape, guys, right? Whatever it takes, tape those hands down and resist the temptation to force trades today when this August of the summertime starts to show its personality. Now, the third week of the month. What do we know about the third week of the month? OPEX, baby. Third Friday of every 1 month, we have OPEX. The third Friday of every 1 month, we have OPEX. We have quad witching the third Friday of every 3 months. That will be next OPEX, right? So look for a big, big interruption in a 1 month's time. We know we have the third week of the month. We know it's a Friday. We know it's the month of August. Guys, all of this is spelling potential disaster if you're not ready for this today. What can we expect to have happen today? We can expect to see low volume, right? Mostly because of that self-fulfilling prophecy. I know that you know, that other traders know, that I know, right? Today is OPEX Friday. So because of that, we know that we've got to expect lower volume. Excuse me 1 second here while the screens flicker. There we go. So we can expect lower volume, inconsistencies in price action, which means I've got to be on my toes today. Looking at the news here, we know today being OPEX Friday, beware, right? Beware. This should be red alert for everybody listening right now. Guys, this is when we have to trade smaller contract sizes. If you're a brand new trader, I would recommend you go to simulation. I almost recommend grabbing the golf clubs or filling up the barbecue grill, but I know we're all here to trade, so I won't recommend you go to the beach instead. But I definitely will recommend that you trade with very, very, very concerned caution. We know we've got Red Star News at 8:30. Red Star News at 8:30 tells us that we should see some opportunities after 8:30. Remember, Red Star News events are always something we look forward to. A Red Star News event almost forces people to get involved. Major money managers, major traders, speculators, pension fund managers, paper traders, locals, everybody will be watching that housing starts number at 8:30. Now, how much will we actually get from that number? It's tough to say. I was talking to Marty here this morning before we started about the locals coming back to the pit to finish the week, and I hope he'll be able to address a little bit of that and what he expects to see from the trading floor today. I don't know about any of that stuff, right, because all I have is a bunch of screens in front of me. So it's great to have him here with us today to give us some clues regarding that. 8:30 a.m. Eastern Time, we've got housing starts. Be ready. If you're trading this morning, be ready at 8:30 because that's going to be the best time of the morning to get involved. 9:55 is consumer sentiment. Now, consumer sentiment is going to be a very important number today. We know we've been talking about the Fed speak, the tapering speak. We know everybody's been hinging on inflation and when is the Fed going to start raising rates again. Consumer sentiment is definitely going to be on the radars for most traders this morning. So what we see here today is an OPEX Friday in the month of August where we have news at 8:30 and 9:55. This tells me to get in early and get out early. After 10:30 this morning, guys, I have a funny feeling this market is going to be all over the place, like a ship without a rudder. So be very careful taking trades after 10:30 this morning. Remember, it's all going to slow down really fast, and you're going to see it. It's going to be 9:55 news. It'll be then 10:15, 10:25, and by 10:45, you'll be scratching your head going, are these charts even working anymore? Because it's going to be slow. It'll be slow. All right? I'm going to recommend an early close today and trading smaller size. Set your alarm clocks. There's the news for today. Now that we have the layout for today, let's begin looking at some charts. This is the fun part, right? This is the fun part. It's about time we got to some charts here, Joe. Now, one of the things I always like to do here, one of the things, I don't talk about it very much on these calls because we don't want to give everything away to the general public, but one of the things we always do is we always begin looking at the average volume. And what I like to do is I take a look at the average volume by marking up a 30-minute chart. I like to draw in the average volume here, and of course we see here we're at 7 o'clock. Compare that to yesterday at 7 o'clock, and we are below average. We are below average. We are below average, below average. Yeah, as you can tell, we are below average volume right now. Why should I care about average volume? Well, because it's a good indication of, it's a good confirmation of what we just spoke about. We're expecting fewer people to be participating today. Now, if you're a new trader, that may not make much of a difference to you. But let this be a warning. When there's low volume, when there's no liquidity, when you try to buy, you're going to get filled at a higher price. You don't want to get filled at a higher price when you buy, right? You make your money when you buy low and sell high. When we don't have a lot of volume, we see inconsistencies in price action, whether it be poor fills, right, slippage from trying to get into trades, or whether it be patterns not working out, or moving averages not holding, or whatever the case may be. Resistance, support, patterns won't work as well when the volume is lower. Now, don't let me mislead you here. That volume can improve. So we may see that average volume come right back into play here at 8:30. What I do is I, of course, compare the average volume today to where we were yesterday at this time. Make sure you do it at the same time of day, right? So it's 7:45. Of course, compare the 7:45 candle yesterday and the day before. Now, what do we see here? First things first, this is my VIP chart. My VIP chart is really important because it's going to give me major levels of support and resistance. First thing I can see is ranges, range highs, range lows. Check out the previous week's high here at 107.69, a very important line in the sand. You can see we danced around that level yesterday morning for a few hours, right, just after that news came out, eventually collapsed, and then came right back up and tested it again. The prior week's high. Now, think about this, guys. We're always thinking of clues. We're always thinking between the lines. What could the prior week high be telling us right now? Well, it tells me that the buyers on crude oil see value in higher prices. It tells me that there's an overall sentiment that is bullish. How do I know that? Why would I say that because we're at the prior week's high, we must be bullish? Well, I can tell you right now, we can't be bearish at the prior week's high, so cross that off your list. So we know right away, if we were bearish, we'd be at the prior week's low. This is the beautiful thing about being a trader, right? And this is why you'll hear traders say that price is the truth. There is no manipulation in this. Nobody lies when they take their money out of their back pocket and they put it in the markets. Nobody lies. Everybody does what they truly believe, right, is where price will go. So right now, we can only assume the traders do see value in higher prices. That means I will expect a test of the previous high of day at 107.87. I will expect a test of the high of this channel, and I will expect a potential test of this 108.93 overhead. Now, don't be surprised here, folks, if we go up to the previous high of day, rattle around here for a while because it is an OPEX Friday. Don't be surprised if we try to go lower, you get a fake out breakout, and then go higher again. It will be inconsistent today because, again, it's OPEX Friday. One thing is for sure, though, we are right in the middle of yesterday's range. We're at the highs of the last 3 days, right? You can see that. So in the middle of this range, we know the best trades will occur at the lows and at the highs. So we need to be patient. Right away this morning, we know we've got to be patient. The best trades will come at the previous high of day. I will sell short, right, with a reversal. If we keep going higher, I know that's a sign of things to come. I'm buying pullbacks. If we keep going higher above the previous high of day, 107.87. As we go lower, I will buy that previous low of day first, right? I'll buy that previous low of day first as support. If it goes lower, now I've got to worry about that channel. I'm going to buy the lows of that channel. This is where you've got to be aware of your surroundings. Selling short below that previous low of day will be higher risk. I will wait to see confirmation that we're going lower, and then I'll look to sell with my wave pattern short down to the previous low of day at 105.60. That 105.60 area, as you can see here, was tested multiple times earlier this week. And so if these bears come in strong, you can expect that 105.60 to be tested eventually. The only problem is, again, you got that low of that channel staring you down there. That's going to be difficult to break. I would rather look to buy that low. If I happen to lose on that trade, if I happen to get stopped out of that trade, that's perfect proof for me now to sell short, right? So we know exactly what the plan's going to be. Previous high of day above us, previous low of day, I've got 107.87 and 106.60. Those are my sweet spots here today, guys. That's where I'm looking for the best trades to occur. Now, keep on moving here. Move over to our anchor chart here, and you can see a lot more detail on this now. A lot more detail. Now that we open up a tick chart, tick charts will always show us more details. They'll also give us more trading opportunities every day. On this tick chart, you can see this big bear channel, but you can also see this short-term bull channel. This happens quite often, actually. We get channels inside of channels on these long-term anchor charts. What do we see here? Well, first of all, if we're trying to go higher, crude oil has its work cut out for us. We've got 107.41 and 108.07 as resistance. No wonder we're seeing a little bit of lower highs here and higher lows. It looks like the crude buyers are getting exhausted here trying to get price going through this resistance. Makes sense to me. This is my double top, right? This is my double top area right here. So we're expecting to see some resistance hold here. We also have, again, as price goes higher, we get the top of both channels. Now, clearly, if price goes lower, we have a wonderful buying opportunity here today at 106.30. That is a great opportunity there to buy at that major support. Now, this was previous resistance, if you're a member of mine. This was previous resistance that, of course, was broken and now will be used as support, right, to move higher. So 106.30, look for a buy at that 106.30. If we go lower, 105.32, and of course, I've got levels below me at 105.05 and 103.43. All of these levels below me, I will buy as support first. If they get broken, they turn into resistance, and I'll use it to sell short down to the next level of support. Looking at this chart right now, if I had to guess my direction, I would say buying at support or buying pullbacks with new higher highs. Those will be the high percentage trades this morning. Moving forward, one more chart time frame here for me, and we're going to really use this one to our advantage. This one is a very powerful chart. We move one time frame faster this morning, and now we begin to really see some important clues. Everything else we've seen so far this morning is major support, major resistance, used for profit targets and overall direction. Now this chart is going to help me actually put the rubber to the road and actually get into some trades today. What do we see? Well, first of all, we can see here we have this wedge, and this price wedge is very predictive of what's going to go on today. Now, we know that for every wedge, there must be a breakout, and so you can see here, this is what I'll call a bull wedge. You may call it a bull flag or a bull pennant. This does suggest, though, that prices will be going higher here. 108.49 is where I expect prices to go to. That will be my target here in the short term today, 108.49. Members, that is one of my extensions that we talk about with our fib tool. And of course, I've got support levels below me at 106.74. Don't forget, guys, we could easily see this price because of that resistance overhead. We could easily see it fail, bounce off this support, and then go. Right? We have to assume that anything can happen today on this OPEX Friday. It's going to be a little bit of a wacky morning, I assume. So we know that the price wedge tells us expect higher prices, but we just don't know where and when that higher price is going to occur. It may happen right away. It may happen after it bounces lower and then goes higher, but we do expect here, unless that news comes out, something unexpected, unless those housing starts come out extremely low, unless consumer confidence number comes out extremely low, it does look like we're going to get a little bit of a bullish move this morning. Now, one more thing before I turn over to Marty. If we get sideways today, if this turns into a sideways range-based day, members, don't forget to use your trigger zones number 2. Okay? If this turns into a sideways trading day, and what I mean by that is if we mark up the highs of this range, we mark up the lows of this range, if we end up going sideways inside of this, That's okay. Just be aware. The market personality is going to tell us what's going on. If we see new higher highs, we know we're trending. I'm getting to buy pullbacks. But if we see this thing start to go sideways here, and you'll know what I'm talking about, it'll bounce off the lows, it'll bounce off the highs. Members, don't forget, use those trigger zones number 2s to look to buy those lows and sell those highs of the range. All right? We're using reversal patterns of the highs and lows. Make sure you keep an eye on that market personality. We're not trying to force anything on this OPEX Friday. Now, this is just one man's opinion. We looked at some charts. We took a look at our news today. I'm seeing consolidation. I'm seeing a slightly bullish tone to the market here this morning. I've given you guys a lot of different anchor charts to use for support and resistance, but I'm really interested to see what Marty thinks on the floor today. You know, Marty's got his feet on the ground, the NYMEX exchange. He's the one seeing exactly where all this takes place. Marty, happy Friday to you. Great to have you here with us. What are you seeing on the floor this morning, my man?
Good morning, JJ. Good morning to you on a Friday. Well, made it through the week, and the options expired yesterday in crude. Again, we saw the crude OPEX yesterday for the SEP contract. So we're going to be rolling now into front month D's. October. Gosh, front month D's. No, I'm jumping the gun here. Well, okay, so we're going to be coming into front month October now in our options, and we're probably going to start to see some a little bit of money probably flow into the outright October contract, but let's just kind of get down to it here today. So we have all the big equity indexes and all the big futures contracts. They all roll in their options today. So we have OPEX of S&Ps, we have OPEX of 10 years and dollars and euros and all stuff like that. So again, that's going to be a big driver, at least in terms of looking at the risk on, risk off sentiment, looking at the correlation between other markets. But again, we got that 107, even 107 half settlement level, what we were looking for yesterday in terms of where the big traders were placing their money in the options. Right, we had a lot of open interest in the market that indicated that there's a little bit more players in the market that we see at the moment. Again, open interest this morning in the high 300,000s. So that's big in terms of players and people coming in, but it was really just for those last second trades that we saw Wednesday, Thursday, Friday, right? So today we're going to get a taste of those big orders or big trades coming in. So, all right, on crude, right now what we have, I got a really similar thing that JJ had in his chart. You can just see that we have our channel, right, our sideways range, our wedge here, and we're towards the higher end of the wedge. Again, we're going to be looking for a breakout of the wedge. Look at all the turmoil that's happening. Again, the first thing I did this morning was turn on the news, and I saw that we had a bunch of turmoil going on over in Egypt, right? We saw news out of Libya yesterday, so we have a lot of variables to rally. Okay, the coins are in place to rally due to all this geopolitical news that we've been hearing of out of Egypt and out of Libya and out of the rest of the Mideast where we're having all these issues. So that's going to be a rally. It's going to be a rally catalyst. Now, as I mentioned, a lot of traders that I've been speaking to over the last couple of days have been kind of positioning themselves a little bit net long due to this, because they don't want to be caught with their pants down and all this stuff happens over in the Mideast and the market just skyrockets. So most locals, most traders are hedged to the long side just to kind of be safe out there because of all these geopolitical stuff, so nobody wants to be stuck short at the moment. So even though we should be coming in and selling the highs, a lot of people are coming in to protect themselves for upside, right? So looking over at all of our usual suspects this morning, we have the crude RBOB heating oil and even the Brent October contract all trading higher this morning. Again, just with a little bit of a bid to the market, a little bit of that bearish tone due to, that's right, geopolitical news. Again, we do have a few numbers due out today, which are going to be potential market movers at 8:30 and 9:55, especially that consumer sentiment number at 9:55, and also that housing start number, and productivity and cost, I believe, at 8:30. So that's going to be a potential market mover. Right now, Brent WTI spread October to October is actually kind of just sitting close to unchanged. Again, the SEP to SEP contract close to unchanged. So again, our spreads right now aren't giving us a huge indication, but it's a little bullish. Calendar spreads this morning are mixed here. You can see our calendar spreads here are a little mixed. Again, we have the green and red arrow just indicating that we're seeing just a little bit of a mixed spread, not giving us much of a bullish or bearish indication. The back months are starting to firm up just weaken out just a bit, which is bullish. Taking a look over at your dollar index, you can see your dollar is just a bit higher today, but look at the chart. I mean, the chart's down. It's down to lows from yesterday. It's very sideways, so on a net change standpoint, I'm just saying it's higher on the day, but that can change. Again, the dollar fell off yesterday big time, so that kind of gives us that idea that, you know, the risk-ons had to kind of come back into play. They're selling dollars, buying gold, crude, etc. So you saw that big dip in the dollar yesterday, and now the dollar's just kind of off those low prints, and that's why I say it's trading higher. Euro currency, pound, cable, Canadian, Aussie, all a little bit lower due to that higher dollar. Equity markets this morning are actually firm. They're actually stronger this morning, which is actually a bullish indication for crude as well, as we use those correlations between crude and the equity market, right? So equities are firm on their OPEX today. Taking a look over now into the natural gas, you can see natural gas demand. Didn't we nail this? We nailed this natural gas. Again, we said 342 we wanted to see, and we got it, 342. So you can see we're at the higher end of our resistance zone than 342, right? It's not quite the high of the channel, but you can see the selling that came in reaction to the 342. So we're going to be looking to at least sell down the 335s, right? 335.90, that low of the channel, and then possibly maybe even buy that channel low. If we keep on going lower, then we're going to sell into those 330 evens, right? So we're going to be selling. We're going to try to buy that 335. If we don't, we keep on going lower, then we're going to buy those 330 evens, right? Okay? Because that's lower end of the channel here. So again, that's going to be your game plan of attack on natural gas. We have Baker Hughes rig counts today at 1 o'clock, but I wouldn't stick around for them, to be honest with you. A lot of traders, as I was speaking to JJ about, right, yesterday, or Monday, I should say, I didn't even show up. You know, I was on vacation, and it was very slow. Jeffrey was telling me he wanted to shut down the broadcast early on Monday. He was texting me. And then Tuesday, we had a similar type activity where it was kind of slow, but then we came into options expiration. Thursday was the day of options expiration. So Wednesday, Thursday, Friday, they all came back, well, most of our traders, and they kind of balance out positions. They get out. The open interest is rising. Big players are back into the market, but don't get fooled. It was only just to get out of those options positions, get out of these big outright positions, start to roll. Because remember, on the roll, that's when all the guys in the pit make their money. So they roll into the October contract. They're still getting rid of SEPs today, so we'll probably see a little bit of some roll activity today, getting rid of SEPs, buying Octobers or whatever they do. But again, still looking for that little bit of a bullish sentiment as they hedge in the October contract to the upside. They finish buying their September, and then they roll into October positions in the open outcry market and on the clearport. So we're starting to see a little bit more of that. So watch for some upside. Watch for the dollar to continue falling, and just be careful on an OPEX day, as we have the dollar options, we have euro options, we have equity options all expiring today. So it's going to be a bit tricky. So watch the news. Be careful. Again, I'm going to give you guys some levels right now, and then we'll kind of rock and roll and give it back over to JJ in just a minute. So the levels that we're watching, yesterday's pit session high was 107.85. Once again, it's 107.85. So if we can break up above that 107.85, that would be very nice, bullish. Again, very firm type strong activity if we can get above that 107.85. Low from yesterday, 106.60. Closing settlement number 107. Oh, let me just actually put it up on the board. How about that? Wouldn't that be helpful, guys, if I put the levels up? Okay, so the high from yesterday was 107.85. The low was 106.60. Closing settlement number 107.35, right? Today we have a daily pivot up at 107.27. Resistance up above 107.94, 108.52, and 109.77. Support down below 106.69, 102.06 and 02, sorry, and 104.77 is that support down below. Looking over into your open interest again, 301,470, rising quite significantly, as you can see here. Even in the September contract, it's like 104,000. So if you add that all together, that's big open interest. Taking a look over into your options again, this was just because they settled those the SEP contracts yesterday, but there's a lot of interest in the 100 even, the 107 call, and the 106, 105 puts. But that was in the SEP, so don't really rely on that now as we're in October in the options. Natural gas pit session levels for today, from yesterday here, and also for today, support resistance here. What I got for you, pit session high, 342.70, low, 341.10. Closing settlement number 341.80. Daily pivot today, we have 338.5. Resistance up above, I got 345.90, 349.5, and 360.5. Support down below, 334.30, 327.5, and 318 even. So again, those are going to be levels that we're going to try to buy there on the way down, and also including that 331.10 or 330 even, whatever you want to call it. I'm thinking 331.10, but we can call it 331 even. And that's really, guys, about it for today. Again, those are your levels right there. Again, you saw that we had a continuation of the upside from yesterday, and if we can get above yesterday's high in the crude, that would be awfully supportive of higher prices. I'm thinking, especially with all this geopolitical news that's hitting the board over the overnight rally happened in Egypt. So keep on watching that news. Alrighty, guys, I'm going to throw it back now over to JJ. Have a wonderful weekend. I'll be sure to see you all here Monday.
Awesome job, Marty. Boy, as always, great stuff. Great to hear from you here this morning. Thanks for being here. Happy Friday to you too. Guys and gals, that brings us here to the end of our road here this morning. I want to thank you all for being a part of this call today. Now, don't forget, I need your help. I need your help. Send me an email. Let me know what your feedback is. We are always looking to make this broadcast better. Marty and I both work very hard to make this broadcast a great spot for you to begin your day each morning trading crude and nat gas. Hope you guys enjoyed the broadcast. Send me some feedback. And also, would you like to get the next attendance link for this? Would you like to be invited to Monday's broadcast as well? I've got a free attendance link here for you. Just shoot us an email. Let us know you'd like to be included on tomorrow's call, and we'll get you guys registered for Monday morning's call. It's been a great week in our trade room. It's been a great week on these broadcasts. I want to thank the whole team over at Traders Audio, especially Marty and his partner Jeffrey. Don't forget to check them out every day, 8:50 a.m. Eastern Time over at Traders Audio. And, of course, come see me Monday through Friday, 8 a.m. Eastern Time at SchoolOfTrade.com. Shoot us an email, jump on the blog, give us a call, keep in touch, guys, and have a great weekend out there. We'll see you guys on Monday morning for another edition of the Crude Oil Morning Prep. Don't forget to send us your feedback. Enjoy that summertime weekend, guys. We'll get a few more of them left, and we'll see you here for an exciting brand new week next week. Have a wonderful weekend. Be safe out there trading today. Don't forget your surroundings. And, of course, we'll see you on Monday. Adios, amigos. Bye-bye for now.